Hey everybody, good afternoon. This is Doc Severson and Dave Lukas here of 12-Minute Trading. Today's Monday, the 11th of March, and here we go again. We've got a Fed meeting coming up this week, but before we get to that point, we got CPI tomorrow morning. Dave, what are you seeing in the markets? What's going on in your world?
I've been telling my students for the last couple of weeks after NVDA that earnings that the market uh, like everything's priced in. Like there's not really any major market moving events anymore. So it's like, what's the catalyst now to continue just going higher, higher, higher? And the other thing that I said about this time of year right now, with we've got CPI tomorrow. We'll see if that is anything. CPI has been kind of staying put, maybe inching a little bit higher, but it's not going up enough to really spook things in a huge way, and it's not really going lower to make the Fed get moving anytime faster. So the market is kind of stuck in this little limbo, I guess, of this where we're betting on June and all of that, right? And so the market's got that priced in. The one thing that I've said, and it may have started Friday, we'll see. I mean, this has been the pattern, right? We get these sharp moves lower, and then it gets bought back up the next day or over the next couple of days, and then the pattern's not broken. We haven't broken the pattern yet, right? But going into March, it's the end of the quarter, right? So if you're a big fund manager, you're one of the big guys, you've had an epic run through for the beginning of the year, and you're sitting there going, okay, I got CPI, I got PPI, I got the Fed next week, I got the end of the quarter after that. Why not lock in some gains ahead of all that risk? Just take the money off the table, lock in your gains for the quarter, and then after the events happen, if the market continues going higher, you can jump back in, or if it sells off, even better, you can buy in at a lower level. Why, from a prudence standpoint, why not do that? And so that's why I thought maybe we could see some softness during this time over these couple of weeks. And does that mean we're going to get this massive correction? No, I think we need a bigger catalyst to make that happen, right? Like something needs to blow up. Like, everybody's like, oh, watch Japan because now they're not gonna, they're not gonna do the yield curve control anymore and stuff like that. I mean, maybe that has an impact. I don't know. But right now, we're just kind of in this chop, right? And I think we stay in that chop, or we get a nice little maybe 5% correction or so. Maybe we get in the break into 4,900 a little bit on the SPX, and then that puts in a floor type thing. Just for that end of the quarter window dressing, selling, taking those profits and going from there. And then we get base from there. Probably some more chop, and then we get it. It's just like last year, right? Remember, we had this period about this time, March is, we had that bank issues and stuff, but we bottomed out, chopped around through April into early May, going nowhere, and then went off to the races in the summer. To me, it's almost setting up very similar to that. So that's kind of how I'm seeing it right now.
Yeah, I'm going to bring up that section that you're just talking about here on the chart. So we had,
Yeah.
we were still this is where the bottom of the bear market was in 22. And so we came off of here, and this was very significant because this was a higher low, higher high. So we actually had a change in polarity. But then we had the banking crisis, and people said, oh, we're just going to, we're going to revisit the lows, and the negativity went off the charts at that point. But this is the period that you're talking about here. So for almost 2 straight months, we went just chug, chug, chug sideways. And, everybody was thinking it's either going to do one of two things, and eventually the upside pressure took hold. So what you're talking about is that maybe we do something similar to that for the next couple of months or so. And boy,
maybe even a smaller pullback and then chopping in that range. That puts you at you got a nice higher low, and that forms your new base. And then you go off to the races in the summer again. And then you get your swoon in the fall, right? Ahead of the election, right? A little bit of uncertainty, that sort of thing. People taking chips off the table. The election happens. Then you got certainty. Then you pile right back in and run it to the end of the year. I could see this year very much happening like that.
I want to take you back in time here and show you what 2016 looked like. So here's 2016. We couldn't get out of our own way for this period. Now, the only thing that broke this thing out was Brexit. That was Brexit, where, we basically did a slingshot move off of here, built up the negativity that got wound out to the upside, and then we did it all over again. We went nowhere, literally, for about 3 months before the election. So we could be seeing
We
something.
swooned before the election because everybody wanted to get their chips off the table just
Right.
in case. There was a lot more uncertainty then, though. I would say that now, if it ends up being Biden and Trump, because there is still this thing that maybe Biden isn't going to be the candidate, but if it is still Biden and Trump, market will have a little bit easier time with that because they're both known commodities.
Yeah, so a lot of people will say, well, if we pull back, where are we going to pull back to? One of the first things that I'll do here is we can throw some fibs on here. So fib retracements can be very useful. So let's assume that Friday's outside day, that's a key reversal bar, might mark an intermediate high in the meantime. Okay, so if we did something like that, then we'd have very common retracements here at about 49.23. And boy, that really lines up with a nice support level here, because former resistance becomes new support. So 49.33 or 49.50, somewhere in that area, that would be a good level to come down. I think if we went, to me, this is as deep as we're going to go into the summer.
And Doc, to point out too, that actually coincides with the lower Bollinger Band on the daily chart. It's right at 49.50. So talk about a level to come back to, and people would be scared to death if we went that way in a hurry, but that would be a very natural thing to see.
So let's just actually add the Bollinger Bands on here to give you guys an idea where that is. So there's your blue line is your 20 simple moving average, which has been support all the way up through here. And then here is what Dave is talking about is the confluence of the lower Bollinger Band as well as the 23.6 retracement. So that could be coming along. Something else that we can consider as well too is, now that is the big weekly swing. That's the great big weekly swing. So actually, let me get this off of here. I'm going to remove that and then I'm going to do a fib retracement, but this time I'm going to take it from the beginning of the year's pullback. And now this is a little bit more interesting. Now look at this pullback now to 38.2, which is always going to be an interesting one. Or actually 50% lines up with that 49.30 area. So a full 50% retrace on this thing lines up with some really good levels. So Dave and I were talking earlier about like what we'll do is if the price ever gets down to this level, we will sell furiously to the downside. And we're probably going to be able to get stuff that's way down here if and when that happens. But we're kind of, right now, we did a lot of, from the beginning of the year, we did a lot of put selling. And then since this point here, we've kind of like turned it off because the reward to risk is really poor right now, continuing to sell. So we've been waiting for some kind of pullback so that we can once again reinstate the offense for that. Hey, by the way, if there's anybody,
need a volatility spike.
Yeah, we do need that. And by the way, looking at the VIX right now, the VIX is still pretty muted, and the IV percentile is still down in the lower 20s, which is, we don't have a lot of risk premium right now. And we're not expecting a whole ton, but a little spike might be good. If there's anybody that's joined us live that wants to chat in with a question or anything like that, please let us know. We'll be here for another maybe 10, 15 minutes or so, talking to you about markets. Let's see. The other thing, too, to look at right now is what's happening with interest rates. And here's the 10-year note.
Mm-hmm.
And 10-year note, anytime we see something like this happen where the price, like last week was actually pretty good because bond yields were dropping. And now the last couple of days, they're starting to turn around again. So we want to keep an eye on that and whether or not we have, any kind of a move like this, because yields going higher means that people are going to be dumping capital into that. So that may be another catalyst, and especially after tomorrow morning where we get CPI, and CPI is supposed to be 0.4% month to month. And the last month was 0.3%. So they're actually calling for an increase in month to month consumer price index. So that'll be interesting. And the
I don't
other,
think it. I don't think it matters to the market much if it comes in at that. I don't think that matters. If it goes above that, then you'll see it be a reason to sell some more.
yeah,
If it goes below that, though, I don't know if it'll be. If it comes in at 0.3, I don't know if that will be a major catalyst to just all of a sudden we're going to see a face ripping move higher off this. Only because the Fed's still not going to raise rates
no,
or sorry lower rates on this
no,
next meeting, and the market knows that,
yeah,
right? So it's still June at this point. The only thing is like if it is higher, then that spooks the market a little bit because then it's like, oh crap, is June still in play? And that's the only. So it's got to be much higher to really, I think, have a bigger impact. But the expected move for tomorrow is pretty decent size.
oh, it's pretty big, yeah.
So
Yeah, we are
yeah,
expecting to see some volatility from that. So we're gonna we already sold into tomorrow, so we're going to reap the benefits or deal with the whirlwind from that.
the consequences. Yeah, well, we'll see what happens at the end of the day. Today, we always come on at 2:30. We like to come in at 2:30, guys. And people have asked me like, Dave, why don't you guys go live early in the morning? Why do 2:30? If you've ever heard the expression that the amateurs open the market and the pros close it, typically the pros start to make their moves after 2:30 p.m. So it's nice to be on in this time to really see what the market's truly going to do. And then, in fact, as we're here, we're getting close back to even for the day on the S&P, right? So we'll see if these pros are just moving it up to sell it off into end of day, or they're going to take it positive into tomorrow. If they take it positive into the end of the day, that might be a sign that somebody knows something about those numbers. In fact, a few weeks ago, we kind of had that where we had a big down day like this. And I forget, it was either maybe into the Fed or maybe it was a CPI or something again. I have to go back and look, but we were down like 40 plus handles going into the 3 o'clock hour. And then there was just this buy, program that hit, and it
Right.
ran that thing all the way back to positive at the end of the day plus. And then the next day it kept rocking higher, based on that news. So we'll see what the pros know as we get to the end of the day here.
Boy, this morning, while I got this chart up, this morning was actually kind of interesting because during the room, and we were in the room until just after 10 o'clock. So this is the opening range, which shows up. That is the first 30 minutes of price action. And so I had a trending market at that point. If we take this out to the hard right edge, this is what we were looking at in the trading room at that point. So we really had no entry because it was all just moving to the downside. But what I talked about in the room was, look, if the price does establish down here in the secondary range, this is the secondary range between the lower expected move and then this, the opening range. That's a range all by itself. And so I set up what we call an iron fly for 0 DTE. It kind of looks like this, right? So that's what an iron fly looks like, with the idea that we get in, we get out. Normally we're in and out between 20 and 30 minutes or so. Now the problem was I got into the trade, and then E-Trade all of a sudden was not allowing me to make any kind of, E-Trade basically went down at that point. And I was like, that is never a good feeling because you're into something that you can't get out of. And so I had to call them up, and then we were able to kind of like Frankenstein a way around developing a limit order. And so eventually I was out in 50 minutes on this trade. So we still hit target profit on this trade, but that's kind of some of the things that happened during the day. And unfortunately, there's really no way around something like that. I guess the good news is that I can't remember the last time that E-Trade actually went down on me like that. So hopefully they'll have a little bit better stability going forward. But I've had hung futures contracts where you're out there when it's like you got a live futures contract, you can't close it, that's crazy.
Yep.
But most of the time, compared to where it was 20 years ago, the platforms are so much better now these days.
Well, yeah, a little tip to you, because I see that too, especially with futures. If you trade futures, if you've got other, or even things like the SPX and stuff like that, if you've got other orders on, like closing orders a lot of times and stuff. And you go to like close out, an order. Sometimes it won't let you. It'll like get rejected or whatever. And you're like, what the heck? I'm trying to close a trade. It's because it's taken into account all your other orders that you have in play. So if you just take them all off, if you like, cancel out all those, orders, then it lets you do it. Then you got to it sucks. You got to put the orders back on, but it's, that happens a lot, when you trade a lot, have to do a lot of options too. So if you run into something like that, don't panic. Take, first step, if you've got like 10 SPX trades on and they're all got different orders in, just cancel all the open orders and then try to do your thing. And then if it doesn't work, then call the trade desk. Doesn't sound like that's what happened to you this morning. Sounds like it was more of a, E-Trade, getting an issue or some issues with their platform.
Fortunately, E-Trade, I use what's called Power E-Trade, which was the old Trade Monster platform, which got bought out by Options House, which got bought out by E-Trade. So it's originally started trading it maybe like 15 years ago. And it's the same interface. It's sort of like lived in different homes, much like what TD Ameritrade Thinkorswim is going to be living under Schwab.
Right.
Or is living under Schwab now. I finally am going to transfer later on this month. They finally moved my account over to Schwab later on this month. I don't know why they've taken so long with me.
I've actually had a couple accounts move over and the other ones haven't yet, but it's the same thing. It's the same. It's Thinkorswim. It's just blue now. So there's no real difference and everything seemed to transfer okay. So hopefully it goes well for you too.
Yeah, sure it will. Yeah. So what I had to do was,
those of you out there,
I had to go into basically a stock trader's interface and go, like, what you don't want to do is to go into a stuff, like if I was to go into something like Robinhood and try to set up an iron condor, it would be a disaster, right? So that's basically what I had to do this morning was like go like Frankenstein an exit order into there.
It's funny. Well, we're flirting with positive now on the SPX. The NDX is probably right behind it. Yep. This is about where we're around lunchtime today. We saw this, and then we sold back off. So I wouldn't be surprised to see that happen in the end of the day. Again, unless somebody knows something, then it'll really get bought up and go positive. If not, those guys will clear their risk ahead of tomorrow, and you'll probably, I don't know if you'll end at the lows of the day, but you'll be down there. But now we're positive, so we'll see how today ends up. I was thinking about just what happens, like, if we just continue going higher from here. Like, what starts to happen, right? Because we're already at that point. You and I were talking about this earlier, and I love your take on this, is because what happens is like you said, like, the options start to get a lot, like more volatility comes on the market. It's harder to sell options. You have to start doing other things to make money. And that's kind of sets up the ultimate, correction that follows, because people are having to do things that are outside the norm. They're trying to get more premium. They're trying to find a way to win. And because there's just no jack in the chains and stuff, it almost collapses on itself.
I have seen this every single time. The market will absolutely push everything to the very edge. There is no like, hey, let's take this easy. No, these guys, I mean, especially these institutions will squeeze blood out of a stone. Especially they will take a market rally as long as they possibly can, and only at gunpoint will they close positions out. And usually by that point it's too late, because, like we point out so often, you got to play defense during times of peace. Can't wait until things start moving. You can't hedge at that point. So that may be something that, like, I guess based, Dave and I are not saying that we're expecting a crash or anything. We're still expecting to see the market over time this year probably head higher. This is a very strong primary uptrend. But during a very strong primary uptrend, you're going to have noise. You're going to have consolidation periods that convince everybody that, oh, this is all over with. Similar to what we saw last fall. We had a 10% correction last fall, which started at the beginning of August and went all the way through October. And by that point, everybody was convinced that, okay, everything's hit the fan. This is not looking good right now. And
Yep.
you can even go back and look at our thumbnail from late October. It's like, oh, are we in a bear now? It's like, I try to be positive up to that point, but I was being forced to say, well, man, we have pretty serious downtrend here at this. And then boom,
Boom.
right off the bottom. So, we're not saying that we're not expecting to see, anything deep, but it could be,
I
it
think
could
we're in a
be
new bull
protracted.
market, but
It could be protracted for a while.
yeah, we're definitely in a new bull market, but just, typical bull markets, 3 to 4 times a year have pullbacks of 5 to 10%. That's pretty normal behavior for that bull market to have. And so going on almost 6 months now without having anything that's, substantial like that just makes it closer to the time that we do, right? And the more we get up into this, this wedge up in here, and the more volatility sinks, there's just more risk people have to take to make money at those levels because your premium is not as good and everything. And so it's when that happens, and then it just takes one little catalyst.
Yeah.
And then that starts to unwind it because all these people have to cover everything. And it just, selling begets selling at that point. It just exacerbates itself.
Right.
And that's why I always hear bull climbs the stairs, bear goes out the window because of that reason.
Yeah. And it's always, every single time this ever happens, it's like, what you'll see is things will come in like waves. It's like an avalanche where all of a sudden things will start to get weak based on one catalyst, like NVIDIA misses earnings or something like that. And then all of a sudden, it may be due to the reticular activating system. Like when you get your antenna up for negativity, all of a sudden you see it everywhere because I'm telling you, when the worm turns, it's like everything's negative, no matter which way you look. And this is why the sentiment shifts so quickly in these
markets. What are you talking about, Doc? Barron's has got a bull on the cover of the magazine, man. We're there.
Oh,
it's time.
That's
right?
a guarantee, right?
Everybody and their brother over the weekend. The cover has happened. It's over now. The bear market starts Monday.
All I need to know is what Kramer thinks. We'll just invert Kramer.
Well, a minute ago you had the chart up, probably because you thought I was going to go there too, is though Bitcoin. And so I think it would be good to just talk a little bit about what's happening in Bitcoin and just the, we've got the Geo Biden coin and what is it? The, Elizabeth, what's her name?
Elizabeth Warren?
The senator. Horan, yes, that's the coin, and it was up 6,000 points, or 6,000% over the weekend. So there was a story. Somebody bought $100 and walked away with like $50,000 over the weekend on those coins. So talk a little bit about what's going on in those markets.
Well, this is Bitcoin was in a pretty nasty bear, right? This was the last bull that we had, which was here's the pandemic, the bottom of the pandemic, and things will typically bottom out when the worst is there. And so we went on an epic run here, and look at the volatility. I mean, this was a full 61.8 retracement that we had, and then literally weeks later we have a new high on there. So most people get blown out by this volatility. So want to caution you that if you're thinking you're getting into Bitcoin right now, might be, not the greatest time. So you can always just do dollar cost averaging is probably the best way to do something like this. So I've been DCAing since this point down here in May, and it's worked out pretty well for me so far. So, but what I'm going to expect to see at some point is going to be something pretty nasty, but I think there's going to be a bigger floor underneath all of this due to the just all the ETFs. I mean, we have this new, I guess you'd call it like a bridge into the traditional financial world now, is that all this capital is now coming in from the traditional finance world into Bitcoin. And that has to be, as you buy an ETF, that has to be converted over to Bitcoin. And so the miners are not keeping up. They have to mine Bitcoin, and they're not keeping up with the demand that's coming in from the ETFs. Now, this will slow down at some point, and we'll see a little bit of an air pocket come along, and that's going to be your time to, what I always say is like, look for the let's see where I've got it here. Look for the weekly chart. Look for the Bollinger Bands on the weekly chart. The lower Bollinger Band, although these are expanding right now, so this is going to be tough. But like whenever during an uptrend, look for the lower Bollinger Band in the weekly chart, and that is going to be your add point.
Great time.
So, okay. Any other questions out there from anybody? Nothing seen. So.
I did. I pointed this out to you when we were talking before this today. Van Eck has taken all fees off of its Bitcoin ETF. So no fees for trading their Bitcoin ETF through 2025. So talk about incentivizing, right? They see the inflows, they see this appetite, so they are pulling out all the stops to get people to move money into these things. So I think you're right. Bitcoin has its volatility, and man, that would be an awesome pullback to that weekly. That's the place to get in, because I think this thing will continue going higher over time, just because of the scarcity of it.
It's the number one performing asset over the last 10 years. So
yeah, the highest performing asset over the last 10 years is Bitcoin. A lot of people don't know that. But if you just own Bitcoin, you would do better than the stock market, do better than, a lot of these other types of investments. So, and I'm like you, I've dollar cost averaged for years. I started dollar cost averaging on Bitcoin when it was like $300, so, it's been a fun run to watch though. And you kick yourself because it's like, gee, I could have put a lot more in back then, but it's still a nice additional asset to have. In fact, who is it I saw the other day? Oh, Mark Tepper on Mornings with Maria. Tepper, and I know Tepper. We've actually had him on my podcast and stuff before. Smart guy, really good. And he's talking about 5 to 10% of your portfolio in Bitcoin now. And he's dollar cost averaging in and stuff. But 5 to 10%. Can you imagine 5 years ago somebody saying 5 to 10% of your portfolio in Bitcoin?
I've been part of the Bitcoin and cryptocurrency educational service since 2018, and there's times where I wasn't sure if it was going to make it.
Yeah,
and it's like I'm deep in the weeds on this stuff, and I wasn't sure if it was going to make it or not. And it's every time you step back and look at it, though, especially with the insanity you're seeing in Congress and the Fed, it's like maybe this truly is more valuable than gold, with only 21 million in circulation, period, ever. So,
I mean, guys, Biden came out with his budget today, and he wants to spend 7.3 trillion for the next year. I mean, like, I don't care what your politics are, like 7.3 trillion, we only take in maybe 5 trillion in a good year as an economy and taxes. I mean, we're adding $1 trillion every 100 days right now. It's like this. Like, no wonder Bitcoin's going up the way that it is.
Right.
And gold, too. I don't know, gold's breaking out as well.
Yep.
But, like, things that are tangible and have a true value to them, as you debase a currency, is what we're doing, and we've been doing since 1971. I mean, there's natural lift to that, and that's why stock markets go up over time, because the companies are assets. If you've got a company that generates revenue and continues to grow, that's an asset. It's a tangible thing. And so over time, those things go up. Right. If your dollar's getting worth less, that's naturally going up. And it's only going up because the dollar's getting worth less. It's not that that's really gaining more value. It's just that your dollar's losing value. And that's what we're seeing. So these days, like, I see Bitcoin as an inflation hedge. That's one of the things that I see it as. Like gold, I just think it's got some more utility in the sense that electronically it can move faster and do that stuff versus taking your gold and paying for something in gold. But I think the ultimate hedge of wealth, if you don't want it to go backwards, gold over time, and then, Bitcoin juices that, right? So I think there's a place for both of them.
Yeah. To me, I was sold after, it was exactly a year ago, we went through our little Silicon Valley Bank little pullback in mid-March of last year, and Bitcoin absolutely ripped from that point higher. And it was in a really bad base before that point. And I was like, wow, okay, so people are truly now looking at Bitcoin as a hedge against the financial system of the U.S.
Mm-hmm.
So that was
So
that was a big marker for me.
Are you in the camp? Are you in the camp of the target of 200 some thousand by the end of this year?
There's no physics, there's no TA, there's no physics. When you get into animal spirits like this, you've just tapped into $33 trillion of the U.S. stock market, and we've had the biggest inflows in the history of ETFs into the Bitcoin ETFs over the last 6 to 8 weeks or so. So there's no telling how far this is going to go, especially if they add the options onto these ETFs. There's no telling how. Right now, I'm showing the measured move target for the rounded base that I was showing on Bitcoin, and that's 122K. So, what they're talking about is in the next few years, maybe by the end of this decade, somewhere in the $10 million range. So anything could happen.
A quarter of a Bitcoin at that point will do you well, guys.
Will do you well.
So
look for the pullbacks. Cool. Look for the pullbacks.
Yeah. Cool. Well, do we have any questions? I know we're kind of getting to the end of our time, or we're kind of over our time. Is there anybody has any questions on anything that we're talking about? Electronically it can be shut down. Potentially, yeah. That's why there's that cold storage. You have to pull it off and you take it and you can use it, right? That's the Coinbase. Absolutely, that can be shut down. And I use Coinbase, right? So, but if I ever really wanted to, I think the nice thing is I could at least get it onto a drive or get it to a cold storage offline if I needed to, and then use it somehow if I had to, right? But I think more than anything, Bitcoin is looked at like an investment. In fact, the last big bull run, it correlated really well with the NASDAQ, right? In a lot of ways. But I do think it has that inflation hedge to it because of the finiteness of it. There's only 21 million of them, right? So copper ETF, Doc, potential breakout. I think commodities have a chance have a decent chance for breakout in the next 3 to 5 months. I think if inflation goes up, I think, and if the Fed starts to cut rates, that's going to help commodities in the sense that, again, same type of thing. Your dollar's losing value faster because inflation's still eating away at it. And so commodities tend to go up. Where I do think we're going to have maybe an issue is actually if Trump's elected, and not in a bad way. He's going to drill like crazy. He's going to open up all the spigots. And so prices are going to come down. Costs are going to come down. More oil is going to flood the market. So that could actually bring commodities down some. So there's kind of this window between now. But remember, the market's going to sniff this out way ahead of time and start making moves. So I think between now and maybe the end of the summer is going to be maybe a commodity run. We've already seen oil inching up to $80 a barrel and stuff. So. But yeah, I don't know about copper. I don't ever trade copper. I love oil. I don't trade copper.
Yeah, I would say look for a breakout above 24.5 if you see this sustain a move on good volume above 24.5. It's on the way. So, all right, guys. Well, yeah. Let's wrap up for today. Thank you, everybody, for attending this, and especially for those of you on the replay watching this later on. Thanks for taking the time to tune in, and please let us know your questions offline if you have any that we can address next week. So, myself from Doc here and from Dave, thanks everybody, and we will see you guys in the next session. All right, adios.
Bye, guys.
Bye now.